Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, December 24th, Christmas Eve. Just want to wish you all a very, very Merry Christmas tomorrow. Markets will be closed today early. The bond market will be closing at 11 o'clock Pacific Standard Time. Markets will be obviously closed tomorrow, then reopen normal hours the rest of the week. We don't have any data today to go over. It will be kind of obviously pretty quiet, and most of the data will be coming more back end, like Thursday, Friday. We'll see most of the day coming in with some on Wednesday as well. Now, I had mentioned last week that I might do video or not. I'll be doing video on Wednesday. Thursday, I'll be traveling, so I won't be able to do a video on Thursday, but however, I will do on Friday on. Now, um, on Thursday, what I'll do is I'll at least try to get the data and some of the information on Twitter. So if you want to follow me on Twitter, at least you can get that information over there. Now, let's kind of move on for today. We have stock market is way down after one of the worst weeks we've had since the basically the credit crisis last week. It's continuing that trend. Dow is down so far about 400 this morning. But however, we do got a little bit of good news that's been reported today. However, the stock market's not really looking at is that China and U.S. both reported some progress being done on the trade agreements that are being worked out right now. So it went up to a higher level, and that's where it was reported from the Chinese ministerial level. And obviously, that's a great sign where things are moving forward, and that should help ease some of the concerns out there by investors. The other concern that's out there, of course, is the Fed with their rate hikes. That's been kind of spooking investors, and the big reason why we're seeing such a dramatic turn in the stock market here. And so let's kind of move forward, see how this is playing out in the bond market. And the bond market is doing okay. We had a bit of a bounce upwards. We did close upwards, and then we may see kind of a mixed day today. So we're up right now about 9 basis points. But coupled with Friday's where we left off there and today, some lenders might have better pricing or about the same pricing that we had on Friday. So depending on when investors came out with the pricing, it might be about the same or a little bit better than what we saw on Friday. And again, as you can see here, we did test the 200-day moving average on more or less not today, on Friday a little bit today. We came close, but not quite tested. We got a bit of room here until the next level, until we get that Fibonacci level at 101.856 for the next ceiling. So we got a bit of room to move there. Here's the Treasury. We're testing the next level of support here. And if that falls through, we got a little bit more room to fall downwards to about the 2.2719 range. Right now we're hanging about 2.76, so just under this line here, but barely under this line here. All right. So that pretty much wraps things up. This week I would be very cautious. We're just going mostly because you got the big hedge fund guys that are going to be on vacation for the holidays, and you can probably see a lot of choppiness. The bonds most likely will follow what the stock market is doing, and again, just be careful out there because a lot of it will be day traders out there, and so the market will be very thin, and so we could see some choppiness in there. So, anyways, if you guys want to get any updates outside of the video here, just come over to Twitter. You can find me at Mike Bjork on Twitter, and I will be posting any updates in the markets over there. You guys have a great rest of your day. Thanks so much for watching, and again, have a very Merry Christmas, and we'll see you guys on Wednesday. Bye-bye.